welcome to the market alert for Tuesday, the 21st of December 2021. So stock future, oil tumble on Omicron lockdowns and Manchin shockwave. The main reason behind the market sell-off today is the rejection of Biden's $2 trillion tax and spending package, which will lead to a reduction in US economic growth forecast. So they're going to print some more money. It's never ending, is it? Never ending. But that apparently is the reason behind yesterday's move. Well, we'll just have to wait and see how the market reacts. It's up strongly overnight, which we'll look at in just a moment. No news today, as we discussed yesterday. And yeah, let's get on and have a look at the markets. The gold-silver ratio is topping out at 80, which we can see here as well. I'll just cover that while stand here. Right, let's have a look at the Dow, see where the market's trading overnight. Yesterday the market continued its sell-off. It traded down to the 200 MA that I spoke about, the 62% retracement area, and the market came off this before the close, and then it is up on the overnight as well. So let's just draw in from this high to this low, the red and green line that is shown, and these are the fib retracements back to the upside. So maybe the short squeeze is on back to the upside just before Christmas then, or between Christmas and the New Year as well. And then the fun starts when we get to January. In the 30-minute chart yesterday, you can see this is the opening of the session. The market sold off strongly, down. It was already down significantly. We went down 100, 200, 300 points. The market found support. We're oversold, we had divergence in the stochastics, and we've got all of the climatic volume. We've got demand as well, big spike in demand. Market holds, puts in its retracement, and then moves back to the upside, and has continued to do so on the overnight as well. In the German DAX, which is here, similar picture, except we went down to 78.89, which we drew in yesterday as well. And the market coming all the way back. Once they made the decision to bring the market back, you can't short it. I've seen this so many times, and I think it was the 4th of February, but I can't remember what year it was because this has been going on for so long. But the market just turned around and just headed back strongly. And when it does, there's just no chance of actually getting a short high. The short was taken care of as we traded down to the S3 and then 100 points below it yesterday. And as soon as we got to that level, they wanted to bring it back. And I mentioned this yesterday morning, they will gun for the S3. If the market goes through it, they'll want to bring it back. If it doesn't stop there, goes through, breaks, they'll want to bring it back. And that's exactly what we saw. But a few years ago, it was then disclosed that the Fed had phoned all the other central banks and said, look, we need to bring the market back. And this is what we're seeing yesterday. Now, obviously, I can't say that it was a phone call, but certainly the characteristics are very interesting for yesterday, how the market came back off these levels in the Dow and also the DAX and every other stock market included. So we've got the red line here, we've got the green one here, so we know where to draw the fibs to, and there you can see there the upside targets now, should the market continue to move high. We've got volume there as well. We're just getting into oversold territory. Even got a retracement within the stochastics there as well. So that was the daily chart. That's the bigger picture of where we are at the moment. The downside targets will remain just in case the market reverses later today and moves to the downside as well. And of course, yesterday's low will be very, very important if the market reverses. But at the moment, as we can see from the daily chart, it's looking fairly bullish, and they'll want that going into the end of the week. So here we have the S3. When I was recording yesterday, the market headed to the S3. It then traded through 100 points, well, a bit more actually, nearly 150 points at this area. We had the divergence, and again, you can see we've got that climatic volume there over the 30 minutes, and then the market reversed and there was no stopping it moving back to the upside. And you can see there the market trading up to yesterday's high as we look at the bigger time frame there in the 30 minute. Market's been sideways overnight, you'd expect that. It's just starting to break out. It needs to close above the 200 MA in the 30 minute, and then you've got the R1, which takes you back to the DP of yesterday. Close above the 200 MA will sit nicely on the R1, find some support at this level. And we've also, at the moment, we've got the 5 above the 20 and the 50 there below. So these three averages are in the right order. We just need to take out the 200 there as well. Just as we had all of them short here, we've got the 200 above the 50, and the 5 then changed and went below the 20, and then we've got them all in harmony, and the market just trading down with the parabolic there, red all the way through, red bars all the way through as well. Trying to hold the market with demand, market failing. We looked at this yesterday. We got to the S3, we tried to put in some demand. Final shakeout to bring in those that want to go short just after the cash market opens, knowing full well that they had a reversal on the card zone. You can see the market coming back several hundred points there. In the 2 minute chart for yesterday's trades, so we're looking closer now. We've got the S3 line here. This is the green line. The market banging its head against it. We came through it just after I finished recording. That was the first attempt. This is what I mean about trying to get it back above the S3. So here we had a reasonable signal to get back above the S3, but unfortunately the market didn't hold, and that was a fair chunk of a loss of 32 points when the market then reversed and went down to do that final shakeout. And again, even in the smaller time frames, we've got divergence in the stochastics, and you can see the market, there's barely any volume to shout about. It was just a way of just let's move it down, see if anybody else wants to sell. They didn't. And then we had a signal to the upside, and once they shift this around, this is what I was saying earlier, they'll want to get back to that S3. So it was worth holding this particular trade back to the S3, where the market started to close back below the 5 bar moving average, and that produced a 90 point return on that one. And that, again, the reasoning behind this is that S3, they want the market back above S3 if they can, and that's exactly what happened. And then you can see it became a support for the market. In the afternoon we had another one to the upside. The market, this time though, the Dow was falling out of bed, and unfortunately this one pulled back for a 21 point loss, and then the next one barely managed a 9 point profit as well. This trade here was still in progress when this one appeared, so this one obviously takes precedent. The market then trading down to the 200, but out before this, as the market started to reverse back above the 5 bar moving average here, and it actually equated back to 9 points. It was just in the area, the scalp area. I'll just draw that in just to show you there. So you can see it's coming back, and there's the scalp. So not even 10 points on that one, but a 46 point day, just a couple of miserable trades there. That one in particular in the 2 minute when we kicked off, it had all the hallmarks of actually going long because they'd actually tested. We've got divergence, stochastics coming up, but that S3 was a real barrier, a rare event to see that, where it actually offers resistance as opposed to support, breaking through and then moving higher. No, we just wanted to shake everybody else out first and then move the market back, and that's how it works. So overnight, let's have a quick look. We've already seen, obviously, in the daily charts, the market's moving to the upside, which we can see here, with a bit of a shakeout to begin with, and since then, let's just draw those in so you can see the market's traded above yesterday's high. Let me just reset that so get rid of a few of these lines and make it a bit easier on the eye. And there you can see, so we've got all of these support lines on the downside where the market's left behind its rising lows, and even here at the moment still above the 5 bar. In this time frame, you can see at the moment we've got all of the averages lined up in the right way. I'm just narrow this down a bit as well. You'll see the resistance that we've had. We've got multiple lines price wise here where there's some resistance, so we'll need to drive through this with some serious buying. That'll probably happen at 7 a.m. when the cash market comes on. stream, and then we've got 100 points from here up to the R1, which we looked at in the bigger time frame as well. So that's the stock markets for today. We're heading into the Christmas season, of course, so things will slacken up a bit and slow down. However, in the metals markets, silver down yesterday, but it's been allowed to run this, at the moment, which is most odd, but it's making its way back down now, of course. Bit of a spike to the upside there to yesterday's high. Well, we know when you get to yesterday's high, it's always going to be difficult. It's the opposite of what we got in the stock market. If the stock market, because it's incredibly bullish, drops down to the previous day low, they'll buy at this area, keep the market bullish. You don't want to break the rising lows in a bullish market when you've got a situation like you've got in silver, where the market's been making lower highs, which you can see there, and then we've had a bit of a corrective move. They'll want to try and keep this going like this. So when you get to the previous day's high, you will see the weakness come into the market, which we're seeing there at the high, and now we're red. It's got to hold above the DP and yesterday's close if it is to move higher. The averages in the small time frame, though, are in the right order. The 5's above the 20, 20 above 50, and the 50 above 200. But if we don't get any support down at the DP, then we'll continue and take out the previous day's low, which is what you want to see. If the market is bearish, you want to see the previous day's lows being taken out. In the gold markets, you can see also some weakness there at the moment, down yesterday. It's incredible. It is beyond a belief, to be honest with you. We've got interest rate increases in the UK. We've got inflation putting in new highs every month. And we've got the gold and the silver market being manipulated to the downside. Incredible. Incredible. But there you go. When they want to let it go, it'll be vertical, but until that point, they're going to manipulate it down as much as they can. The dollar also yesterday putting in a fair bit of selling, I have to say, for such a narrow bar, but holding overnight, and you can see starting to move to the upside. And this is an interesting bar, actually, because this is borderline absorption of the sell orders, because the bar, I mean, look, you've got massive volume there that's more or less the same as the previous bar. The bar is narrower, and if it was all selling, then you'd see the market move lower, and it's not. So the fact that it's sitting at the 5-bar moving average and you've got all of this volume, they've absorbed the selling that was coming into the market. So this is easy to determine where this is going. This is going up towards the 89% retracement today. And the bit of a move in silver is just a temporary overnight move. I don't know why it's done it. It's unusual, but the Asian market, they're moving it. But when you look at what's going on in the dollar, you can see they absorbed a lot of sell orders coming into the market yesterday, and overnight it's starting to move to the upside as well. Okay, that will do it for this one. I will probably finish on Thursday, because Friday or Christmas Eve half-day trading. And yeah, we'll see what happens between today. We've got today, tomorrow, and Thursday. So we've got 3 days more trading. With a lot can happen during that time as well. Okay, that's it, as I say, for this one. As ever, thanks for watching. See you in the next one.